Problem 12.8, page 431. In this video, we're going to look at part 2, operating cash flows. In video number 1, we looked at initial investment outlay, and we came up with minus $178,000. So if you want to see how we got that figure, go back and watch part 1. In part 2, we're going to focus on operating cash flows. And we read through the problem in the last video. And as we read, we found that there were two things that we needed to think about. And this is how I'll test. I'll test similar to these problems that we're working through on page 431. There is a labor cost savings. So you see I've started up here and said labor cost savings. And this is a positive number, $50,000 for each of the next 3 years. And where I'm getting this is the next to last line of problem 12.8 says the project will have no effect on revenues, but it should save the firm $50,000 per year in before tax labor cost. So savings is the same thing as adding to net income. So these are positive figures. The other item that I have to consider is where things get a little bit complicated, and that is on depreciation. So recall that I have a $170,000 asset that I'm depreciating. So the way that I'm going to figure depreciation for year 1, I've got to use the information that they gave me. Don't worry about the makers and the acronym and what it stands for. All you need is the percentages. 33% in the first year, 45% in the second year, 15% in the third year, and then 7% in the fourth year. Now, in this project, we only are going to keep this spectrometer for 3 years. So we're not going to need the fourth in this calculation. So the way that I calculated year 1 depreciation is I took my $170,000, multiplied by 33%, and got $56,100. Now remember, depreciation is an expense. So I'm going to put it, show it as a negative item under year 1. In year 2, my depreciation rate goes up to 45%. So you'll see in year 2, depreciation was calculated as $170,000 multiplied by 45% equals $76,500. And in year 3, $170,000 multiplied by 0.15 equals $25,500, which I have put in year 3. If I combine these two, my cost savings, which is a positive number, and my depreciation, which is a negative number, I'm going to get EBIT. And we saw this in video 12.2. So if you're unfamiliar with this setup, go back and watch the video in 12-2. Year 1, EBIT is minus $6,100. In year 2, it's minus $26,500. And in year 3, we have a positive $24,500. On the next line, taxes. This is where some students tend to get a little bit confused. When I have a negative EBIT, I'm going to have a tax saving. So think about what this represents. A negative EBIT is money that I don't have to pay taxes on. So it's money that I should have to pay taxes on if it were earnings, but since it's negative, it decreases operating income. So my tax savings from this negative $6,100 is $2,440. So since this represents a tax savings, I enter it as a positive number. The same for year 2. 40% of this $26,500 loss is $10,600. And in year 3, where we have a positive EBIT, you'll notice that the taxes are negative, $9,800. The next line, EBIT multiplied by 1 minus the tax rate, are just these two netted together. Minus 6,100, positive 2,440 is negative 3,660. Negative 26.5, positive 10,600 is minus 15,900. In year 3, positive 24,500 nets against minus 9,800 to get me positive 14,700. Once I get to this line, I need to add back depreciation. Remember, depreciation is a non-cash charge. So when I add back depreciation to EBIT multiplied by 1 minus the tax rate, I'll get my operating cash flow of $52,440 in year 1, $60,600 in year 2, and $40,200 in year 3. Now, I need to relate this back up here to my timeline. So I'm going to take the year 1 cash flow, $52,440 for year 1 and $60,600 for year 2. Year 3 we need to wait on, because in year 3 we're going to sell this spectrometer, so we have to consider after-tax net salvage value, remember. So in part 3 we're going to calculate after-tax net salvage value